Happy Monday, traders, and welcome to a fresh week in markets. Now, markets left off last Friday in the US session. It was a quiet end of week for markets, and several reasons is that the US traders were going away for a long weekend. That today, Monday, is Martin Luther King Day, so US markets tonight, Monday night. Both equity markets and bond markets will be closed. But having said that, on Friday we did get some news that sort of did, or some headlines that did move markets somewhat, and that was that Trump backtracked a little bit. It seems on his number one Fed chair pick, that's Kevin Hasnett, where he basically said that he was happy with the job he's currently doing, and looks like he wants him to stay there. So market did react to that in that it looks as if now they are probably going to get a Fed chair that may not be as dovish as what they first thought. So what we did see is US bond yields go up. So US 10-year yields are back above 4.2%. They're settled around about 4.22. So that's they're about up 5 basis points or so that's the highest that they have been since September of last year. And on the back of that, we did see some marginal US dollar strength come into the currency market as well. Okay, so that was the only sort of meaningful news that came out on Friday. On the weekend, though, we did have a lot of geopolitical news, and it seems like every weekend this happens now. The first one is to do with Greenland. So if anyone globally or market-wise was wondering whether or not Trump is serious about taking Greenland, I think we can put that to bed that he 100% is. So he announced 10% tariffs for most of the European countries that are opposing the US taking Greenland. Starting on the 1st of February. So there's 8 countries here, so the UK, France, Germany, obviously Denmark, most of Scandinavia. And those tariffs will increase to 25% on June the 1st if no deal is done with Greenland. And they will continue at 25% until a deal is reached. And on the back of that now, it looks like the EU is having an emergency summit, but it looks as if they've also got some retaliatory tariffs as well, to the tune of about €100 billion on the US. So look, none of this is positive. Obviously, every time we have tariffs and potential trade wars, look, it is a initial drag on the market anyway. So at the moment, I'd imagine we will see markets start off on Monday trading risk off, and obviously we'll see some flows into the US dollar, and obviously it'll weigh on the euro to start the week. The other geopolitical news that we did get up in the weekend as well, obviously what's going on with the situation in Iran. Trump basically called the Ayatollah Khomeini, a sick man and an evil man, and that it was time for a regime change. So I think, look, the market is underestimating in a big way what happens next with Iran. I think that the only reason why the US didn't bomb Iran or go into Iran a week ago, simple reason is that they weren't ready. And what's happening now is that they do have some warships en route at the moment to Persian Gulf and the Middle East. The USS George Bush and the Abrahams, also a lot of aircraft moving over into the Middle East. So look, they are certainly now, it looks as if, certainly preparing. And obviously when they do basically push the button and hit Iran, I think it's going to be something that they want to be short and sweet. And the only way they can do that is if it's a shock and awe situation, and it's probably one where obviously it's going to be after regime change, so taking out the current regime. So the timing of this is something that obviously is very hard to know, but every day I'd imagine we're getting closer. Could happen this week, yes. Generally happens on weekends when markets close, so maybe next weekend. But it looks as if in the next couple of weeks at some stage, this is certainly something that is realistic, and I think that you really can't discount. So, and the market at the moment certainly hasn't really priced this in. Crude, Australia under $59, that could be at least $20 higher. And obviously equities as well. S&P last week made new record highs. It's only a stone's throw from that. So equities still as well seem to be ignoring this potential risk. So anyway, look, yes, some geopolitical news again on weekends, no doubt is going to play into how these markets open today. And gold is something that is going to like both situations. The last 2 Mondays in a row, gold has had a spectacular run, which is also carried on into Tuesday, the next day. Gold finished around about that just under 4,600. Record highs there around that 4,640. So we have seen some resistance around that level, but breaking that, no doubt, we'll go for a run up to 4,700. But certainly gold is a buy on dips. Now this week we do have a bit on. We start today with some fourth quarter Chinese GDP. Looks as if that's going to fall to a 4-year low, so GDP slowing there. So let's see how the markets react to that. Tuesday there is a Supreme Court decision again. At some stage this month they will be making a decision on whether or not Trump's tariffs are constitutionally legal or not. So market will be a little bit nervous that that may be coming out tomorrow. No doubt if it comes out there's going to be a lot of uncertainty, and markets hate uncertainty. Obviously probably Trump's not going to accept it. It looks like it's potentially going to be a mess, but something to watch out again for tomorrow. Thursday we have some Aussie employment data for December. It's meaningful in that obviously we've got the first RBA decision in the first week of February. Unemployment rate looks to be marginally going up to 4.4% from 4.3%. On Thursday night, there's got some decent US economic data out. Third quarter GDP, it should be okay, above 4%, no issues there. But we've also got US PCE data, which is the Fed's preferred inflation gauge. That should be coming out year on year at about 2.7%, so yes, nowhere near 2% where the Fed's target is and mandate. So it's not going to obviously influence the January Fed meeting for any sort of rate cuts there coming up on the 28th. And then finally on Friday we've got a Bank of Japan meeting. That'll be interesting because obviously they've got a big problem with the currency again, pushing up to 160. Look, no one's expecting them to actually raise rates at this meeting, but I'd be shocked if they were not hawkish and really tried to get the dollar-yen lower, and then signalling that further rate hikes are coming. So yeah, look, key takeaways. Look, we do have a public holiday in the US tonight, so it's going to take out the US cash markets. But having said that, the rest of the market should start trading with a bit of a risk-off tone because of the geopolitical issues that we have at the moment. Good luck with your trades. We'll catch back with you shortly.